A lot of people are surprised now because they see corporate profits going up, and that was not supposed to happen, at least for those people, not for me. Now, I have been saying now for just about all this year in my writings, mostly on my blog at thestreet.com, I've been saying that people who were saying the market is overvalued, and they were basing that on traditional measurements of valuation, let's say price earnings of the S&P 500. I was saying that those people, to me, it seemed like they thought in that PE ratio that the E was somehow fixed. In other words, that it would never move. So they were looking at that ratio, the price over earnings, and let's say they were saying it was historically high, and therefore they were saying that the market was overvalued and it had to come down. Never once did they consider the fact that the P and the E are variables. In other words, they can move, okay? And while the price of the S&P did go up, it doesn't mean that the earnings have to stay static. Now, some people who thought they were very smart thought, well, the earnings are not going to go up because the economy is slow. And those are the people who look at data that's old, the stuff that comes out 30 days or a quarter behind. They don't know what drives the economy. And I have a huge advantage over them because I look at the right information and I understand its effects because I'm an expert in MMT. I look at fiscal flows. So what I argued for a long time was that the thing they were missing was that while the PE might have been historically high for a period of time, the E was going to start to grow. And I knew that the E was going to start to grow, that's the earnings, because rising government spending, that spending flows to firms and individuals. So it flows to their profits, either directly or indirectly. Now you could see the relationship that the corporate profits are roughly 50% of total net federal government spending. For example, last year the federal government spent 4.3 trillion, and before tax corporate profits were 2.15 trillion. Exactly half, okay? And I've been saying that this year, not just saying it, I've been tracking every single day the growth in government spending. I know what it is on a daily basis, year over year. And we are on track to hit a new record high of above 4.6 trillion. So it will be about a 300 billion growth there, which means that corporate profits were going to rise. Now, the after-tax corporate profits, I think, without the inventory adjustment, it was something like 1.64 trillion last year. We're going to be up about 7% this year based on that spending. So like 1.75 or around 1.75 trillion. Okay. We could be higher. I mean, we could go all the way to 4.9 trillion on total spending. We still got 2.5 months left. This month, August and September. Okay. So I do the projections. I mean, it could come in if we go at the rate we're going, it could come in at 4.9 trillion, which means corporate profits are really going to jump. So what that means is, as the market goes up now, the valuation of the market could actually come down. In other words, get cheaper as it's going up. Because even though the price is going up, the expansion in earnings might be faster than the rise in the stock prices. So wouldn't that fool a lot of people? That's not going to fool me because I know this stuff. And it's not going to fool you because I just told you. But then again, you don't have the mental game unless you are a subscriber of MMT Trader. And like I said in the past, if you don't have the mental game, somebody can tell you what's going to happen and you're still not going to make money. Me, I make money every time, and so do my people. Like the guy I talked about just earlier. Brand new, novice, bought my Forex course. Guy never had a loss. Up 17.2% in 2 months. Another guy I talked to you about, Made 25%, and he said he made every mistake in the book, and this year he's going to make 100%. That's how it goes. That's how it goes. But I have the mental game. A lot of you guys don't. But you can get it. Okay, see you later. Bye.